Everyone, Joe Gentili from Left Tail Risk Advisors. So, one of the main reasons that people buy life insurance is because, in one way or another, they want to reduce risk in their life and they want to have some outcomes be as certain to happen as possible. So, for instance, many people buy life insurance because they want to have their families provided for in the event that they pass prematurely. That's very common. Other people want to fund succession in a business or they want to cover estate taxes, but they're buying insurance because they want to ensure that some outcome happens in the future. And in going through that process of how to buy insurance, one of the most underappreciated aspects of it is that there's administration risk with life insurance. It's a contract that you have to hold and maintain throughout your life. So if you're 40 years old and you live a long, full life, that policy may be in force for another 40, 50, 55 years. That is a long time to manage a policy. And over that period of time, the likelihood of it staying in force for that entire time, of doing what you have it to do, part of that is going to rely on how simple it is to administer versus how complex it is to administer. So the simpler it is to administer, the simpler the contract, the more likely that contract is to stay in force. A lot of people, when they're shopping for insurance, they're looking for policies that illustrate the best, that the insurance agent puts in front of them some illustrations of different policies, and some of those illustrations are going to make other policies pop out over others because they're showing these just fantastic growth and rate of return on the cash value and the death benefit and a relatively low amount of money that you have to put in to get there. What that's leaving out is just setting aside that that's built on a whole bunch of assumptions, which probably won't come true or may not come true, is that it also assumes that the policy is going to be administered in a perfect way. So even if when you buy that policy, you have a very competent and a very ethical insurance agent that's working with you, at some point that agent may leave the industry, that agent may retire. You may have trustees for that policies, and the trustees don't fully understand life insurance. You may get divorced. Your cognitive capacity may decline. There's a lot of different things that could happen over the decades. And so, if these things do happen, and it's very likely something is going to happen, you may not know what, but something is going to happen. The easier that policy is to administer, the more likely it is to stay in force. So, if you look at policies on a spectrum, term life insurance policies are very easy to administer, right? You pay the premium and the policy stays in force for another year. You may want to convert the policy at some point. That's the kind of moving part that you have to keep an eye on. Whole life insurance policies, if you need permanent life insurance, they're very easy to administer. As long as you pay the premium, the policy stays in force. So let's assume that you do have something that happens in your life. The agent is no longer there. Cognitive ability declines. People that don't really deeply understand insurance are handling the policy. As long as they're paying that premium, the policy is staying in force. Very simple. You could say the same thing to a lesser extent with guaranteed universal life insurance policies. As long as you pay those premiums, the policy stays in force. The difference is with those is that the payments have to happen on time every time. It's easy to blow a guarantee, and then if you blow the guarantee, the price changes dramatically. And then when you're getting to other types of policies, just regular universal life insurance policies, IULs, VULs, private placement policies, these policies require very close monitoring in order to make sure that those policies are properly funded to stay in force for life. And that's not something that most lay people who don't have a real good understanding of insurance can do on their own. It requires the assistance of a professional. And if you have the assistance of a professional and you understand the risks involved and you understand that you may have to put more money into that policy than you originally thought, those policies can work out. They can work out for people. So I won't say that they're inherently bad in that respect, but they are definitely more complicated. They require more oversight. And if you're not committed to ensuring that you have a professional with you to help you guide you through that policy, and that could be the agent that sold you the policy, and if that agent's out of the picture, you may have to pay somebody out of pocket to review the policy every so often. If you don't have those, if you're not committed to having those pieces in place, and you're required at that point, you're basically resigned to managing the policy on your own. That's when things can get really tricky. And people need to consider this on the front end. Are they willing to accept that risk? That if I'm buying one of those types of policies, one of those universal life insurance policies that I've mentioned, yes, there is the possibility that those policies can have better performance over the long run over some of the simpler, more guarantee heavy contracts that exist, like whole life or term, for instance. But that comes at the cost of having more complexity in administration, which raises the likelihood, if you're left on your own with that policy, that the policy is going to be mismanaged and can end up in a lapse situation. It happens all the time. So all I would say is this, is if you're buying a life insurance policy, you're in the market for one, and you're looking at the different risk factors that exist in buying insurance, you know, what are how is the cash policy, sorry, the cash value being credited? Is it invested like in a VUL in the stock market, or is it in indexes? What's the stability of the life insurance company? Is the cost of insurance guaranteed? All these different factors that people think about with risk. I would add another one, and I would say I don't know if I would say one is the most important of all, but this is certainly up there in terms of importance. How easy is this policy to administer and monitor? Because unless I'm committed to having a professional, even if I have to pay out of pocket for my entire life to monitor this policy, I have to consider that there may be a time when I'm doing that on my own. And if I am not a life insurance professional and I don't want to put in the time to become one, then you should factor that in the risk profile. Simpler at that point is much easier to keep in force and have that policy pay off when you need it versus the more aggressive, complex um, types of policies. So just consider that as a factor when you're buying. It's something that I feel that the industry really underemphasizes as a risk that um, some policies are going to require a professional to hold your hand for the rest of your life on that policy, and some don't. So that said, I hope this was useful. And if it was, I encourage you to like and subscribe for future videos on the topic. Thanks. Have a great day.